You're probably invested in small cap and mid cap schemes, and so are a lot of other people. As a result of which, now what is being proposed is a stress test to ensure that risks are protected against. Let's first talk about why that is required. Sajeet, you broke the story. Why is it required?
It's because in the last 6 months to 1 year, we have seen a lot of run-up happening in small and mid-cap stocks, and also we have seen a lot of mutual funds coming up with small and mid-cap schemes. There's also a lot of flows which are moving into these schemes. In the last 1 year alone, we've seen nearly 65 to 75,000 crores money moving into these schemes, and these are new schemes of retail investors. And there is always a risk associated with small and mid cap, because at the time of run up they run up like crazy, but at the time of sale there isn't any liquidity in the market. So what happens is that the small retail investors are not able to exit,
and the prices fall very dramatically.
That's right, and then there's a sharp cut in the NAV for them. And so there is a requirement from the regulator and the mutual fund body now to do a stress test of all schemes which involve small and mid cap.
So, but what will this stress test include?
So, the stress test will include a lot of parameters, which include which for layman it would be like the portfolio liquidity. What do you mean by portfolio liquidity? It means how much time you take to liquidate your stocks from the portfolio.
How do you judge that? How do you calculate that?
So it's a multiple things which is there. So I'll give you an example. You have stock A, which trades say 100 shares a day. Right. Now for last 3 months, the mutual fund or AMC is required to look at the daily average volume of that. Then it takes the stress volume. What is the stress volume? That when there is a stress in the stock, the number of people selling the stock is more.
Sure.
So they take 3 times that daily average volume, and the mutual fund is now required to take only 10% of that stressed volume as part of the calculation of how many days it will take to liquidate the stock.
So in this case, you said 100 shares a day is the average traded volume for 3 months. 3 times that is 300 shares. 10% of 300 is 30 shares. So assume that each stock on the mutual fund is only able to sell 30 shares every day. So how much time it takes to sell?
So if a mutual fund has say 300 stocks or 300 shares of that particular company, then the mutual fund takes 10 days to fully liquidate. And then what is required is to calculate 25% portfolio liquidation and a 50% portfolio liquidation. So if it's 10 days for the entire liquidation, you divide by 2 to get 5 days for 50% and 2.5-3 days to get 25% portfolio liquidation.
And that's supposed to tell you how easily liquidable or easily sellable a particular scheme is, because if there is redemption pressure, that is, if people come in and sell their units of a mutual fund scheme, how easily can the mutual fund redeem those units or those shares and give the money back to the shareholder?
That's right. So you look at the number of stocks you have in a portfolio, and many of the small and mid cap portfolios have large cap stocks as well, because as per the classification they are allowed to hold up to 20% of the large cap. 35% of large, but many of them are at 20% or 25%, whatever it is. Now what you need to do is that you calculate the liquidity for each of the stocks, and then you remove the bottom 20% of your portfolio. Not the stocks, portfolio, the size of the portfolio, and the remaining 80% or the top 80% by liquidity is calculated for the purpose of liquidation. And then you calculate how many days how many days it takes to liquidate each of the stocks, and then you liquidate based on a proportionate pro rata basis, basically.
So this is portfolio liquidity. It's one of the measures. What else is there, very quickly?
Well, others are like portfolio beta, which basically means that how is your portfolio moving against your benchmark. You have annualized standard deviation between the portfolio's return and the benchmark index, which is there. You have portfolio turnover, which basically means how many times you're churning your portfolio on a monthly basis or on a yearly basis. So it gives you an idea of what the churn ratio is, which is there. So all these are some of the parameters which have to be now disclosed as part of AMFI regulation.
On a monthly basis?
On a monthly basis by the 15th of the month. So for the February month, as per the directions by March 15th, all these portfolios or stress test disclosures needs to come on the website of the respective schemes and on the AMFI website.
Alright, so there you have it, the latest update on the handling of risk for mid-cap and small-cap schemes. If you've got questions for us, write to us in the comment section and stay tuned for a lot more on NDTV Profit.